Alright guys, once again welcome to a brand new video, and in this video, just like I promised, I just wanted to go into some of the tools that we use on TradingView, just because there are some key explanations that I need to do based on those particular tools. Okay, talking about things like the pending limits or pending orders, and also talking about things like the part 2, position 2, and things of that nature. Okay, so I just want to go into these tools specifically on TradingView, and I also want to talk about pips as well. I also want to give you guys a wholesome view of how pips come into play, and how you use your lot size calculator as well to calculate your risk before entering into a trade. So these are very key things that I feel like I need to tackle before we get into technical analysis properly. Okay, so without any further ado, man, let's get into the chart right now, and let's break down these things. Okay. In this video, just like I said, I just want to go over some of the tools that we use here on TradingView, because there are some very key explanations that are tied to it. Okay, so talking about tools like the part tool, talking about tools like the position tool, talking about our lot size as well. Okay, so what I just want to do in this video is make you understand how everything is being put together. Okay, I'm trying to make you understand how the concept of pips is tied to the concept of the position tool, for example. Okay, so while using the position tool, you're going to see how the position tool automatically calculates the number of pips that we are risking, and of course that's tied with our risk management, which is also tied with our lot size. So I just wanted to show you guys how all of these things come together to create the trading ideas that we know. Okay, so the first thing I want to start with here is pips. Right now, for me to start, I just want to go on the weekly time frame here, just so I can draw out some things. So I'm going to go on the weekly time frame here, and I want you guys to pay attention to what I'm about to explain right now. Okay, so let's say we have this as our market right now. So I'm going to do a quick illustration of the market right now, just like we can see in real time. Okay, so if this is the market right now, remember some of the things that we have already talked about. I've talked about trends, and also we talked about how trends are formed. Okay, now how are trends formed? When the market is opened, whatever commodity you're trying to buy is being priced at a particular level. Okay, let's say the price of GBP USD starts off around here somehow. Okay, so that's the current price. Now immediately people start buying that commodity, the value of that particular commodity starts to move to the upside. Why? Because the action people are taking is a bullish action, which is buying. Okay, people are actually buying the market, they are longing the market. Okay, they're getting in on buy positions. Now when they start buying, the price now then starts to move. So we can now see the price moving, and this is how the market moves in real time. Okay, we can now see the price moving all the way up. Sellers are trying to come into the market, but the price just keep going up. Okay, the price just keep going up and up and up and up and up and up. And at the end of the day, we have something like this. Okay, now when it comes to when to enter the market, we have said that the trend is your friend. So the first thing you want to know is that you want to be trading in the direction of the trend. So the trend is your friend. You want to be trading in the direction of the trend. That means you want to be buying this market right now. Okay, so this is the action we are about to take in the market. We're about to start buying the market, because obviously we are in an uptrend and the trend is our friend. Okay, so where do we enter this market? That's when the second statement of buy low and sell high comes in. Okay, now you have to buy when the price is low and sell when the price is high. Now if I zoom into this a little bit, you can see how the price has been moving over time. Right? The price has gone up, it's come down, it's gone up, it's come down, it's gone up, it's come down. Now, this has created some type of bullish market structure. Remember, we talked about market structure in the previous video. This has created some type of bullish market structure, okay? And now we want to buy when this price is relatively low, right? So if this is the current price in the market right now, this here is the current price, right? We can't be buying when the price is this high. We want the price to pull back a little bit to a reasonably lower price before we can buy. Okay, now when we are looking to buy these markets, right, we intend to enter the market at a particular point. Now, if you take these points relative to the last upward push in the market. Okay, so all of these are structure points. We're going to talk about this extensively when we get to technical analysis. Okay, so all of these here are structure points. Okay, all of these are structure points. Now you see how the market has been taking out structure points to the upside because obviously we are in a bullish market. Okay, the market has been heading to the upside, taking out structure points to the upside, pulling back, buyers enter again, taking out structure points to the upside, pulling back, buyers enter again. And now you are about to buy this market. Okay, you are about to get involved with this market. Already, you know that the trend is a bullish trend. That's the first thing. And of course, you want to be buying low and selling high. Okay, so if this is the last structure point right there, right, the market just created a new high, and your intention is for the market to pull back to a specific level so you can now take a buy in the market. So you're expecting the market to pull back to some levels, maybe such as this, now taking into consideration the last leg of structure, okay, from this low to that high. Now you want the market to pull back significantly within this leg, and this is where you want to be taking your buy position from, right? Now, if you're going to be taking your buy position from here, okay, so somewhere around here, this is where you're willing to, trade these markets, right? This is where you're willing to trade this market, meaning that whenever the market pulls back down, your buy position is going to be somewhere around here. Your stop loss is going to be somewhere around here or below this level here. And then your take profits is going to be this level around here. Okay, so I want you guys to understand when to enter the market and how to enter the market in terms of whether or not you're going to use a market execution, meaning you're going to be watching the market. As soon as the market gets to the level you are willing to enter the market, you execute instantly and you are in the market. Or you're going to be using a pending order, talking about your buy limit, sell limits, buy stop, and or sell stop. Okay. So right now, I just want to show you guys what your trade typically is going to be looking like. Now, your entry, let's make the entry a blue line. Let's make your stop loss a red line, okay? And obviously your take profits is a green line. And this is exactly how, it's being presented to you, even when you're looking at the chart. Most of the time, when you execute a trade on your MT4, your entry line, I think your entry line is going to be a green line. Your stop loss line is going to be a red line. Your take profit line is going to be a green line, okay? Now, what I want to explain to you is the idea of pips and how you don't have to stress yourself with the manual calculation of pips, because again, TradingView does everything automatically for you. TradingView can calculate automatically for you the number of pips that you are risking in terms of your entry price to where your stop loss price should be. And of course, it can calculate for your reward. Talking about the risk to reward now, it's going to calculate for you from your entry price to wherever your take profit price is going to be, and that's going to be your reward. So what you're basically looking for is a particular number in terms of like risk to reward, okay, in percentages, right? So if you are risking 1% of your account, you at least want 3% back, okay? If you're risking 2% of your account, depending on the risk to reward that you're looking for, you at least want 4% back, 6% back, and things of that nature, okay? So when you're about to enter your trade like this, remember the black line here is our projection of the trade, right? Is what we believe that, the market is going to do next, right? Since we're in an uptrend, we are waiting for the market to pull back down a little bit so we can now execute a buy trade. Now, immediately you have a trade idea like this, the first thing you're going to do is pull out your position tool, okay? Now, to find your position tool, if you have not brought out all your tools, like I have mine here, just count 5 from the top there. 1, 2, 3, 4, 5. Click on the small arrow, showing here. Okay, if you hover your mouse over this, you're going to see a very small arrow there. So just click on that, and you're going to see your long position tool and your short position too. Now, remember the terminologies that we studied, right? Long position meaning you're trying to buy the market, and short position meaning you're trying to sell the market. Now that we're trying to buy the market, the position tool that we're going to be looking at is the long position tool. So you're going to click that, and then anywhere you click on your chart is going to be the entry price, okay? Now, if I click here, you can see what's happening there. We have a black line here. Obviously, mine is customized. I changed the colors, okay? But on default, I believe this should come like this on default. So apply default. This is how you're going to see this on default, right? The middle line here is your entry line. This here is your stop loss line. So obviously, there are some settings that I've made to this. If you go to style and you go to price labels, okay, yeah, price labels, right? Now the price labels can show there. You can see the price label at this side of the chart. So the middle price there is going to be your entry price. The price at the bottom is going to be your stop loss price, and the price at the top is going to be your take profit. Now, what the position 2 overall is showing us a metric of, what we are risking and what we stand to gain if the position should go in our favor. Okay. Now, in terms of your stop loss, you can keep dragging your stop loss all the way back down. You can see this can be how big your stop loss area is. And this can be how big your take profit area is, right? But the beautiful thing about the position 2 is the fact that it shows you the risk to reward. Now, if you have a position such as this area here is your area of risk, and this area here is your area of reward, meaning that if the market hits your stop loss here, let's say you are risking 1% of your account and the market comes back down, we have a market like this, you're trying to buy the market hits your entry price. Now you are in the trade, right? Let's say you went into a little bit of profit and then the market came back down and hits your stop loss. Now, if you are risking 1% of your account on this particular setup, it means you're only going to lose 1% of your account, okay? And remember, your risk is tied to your lot size. I'm going to show you how to calculate your lot size with a lot size calculator, but I need to make these explanations very, very clear before we go to that, okay? Now, what the position size 2 does is it calculates the number of pips from the entry price to the stop loss price and the number of pips from the entry price to the take profit price, and it gives you your risk to reward. Okay, so think about it in terms of percentages. If you're risking 1% here, your risk to reward is 6% right here. So if you risk 1% and this trade actually goes in your favor, you're going to get a 6.8% return, meaning if 1% of your account is $1, and the position goes in your favor, you're going to get a profit of $6. Okay. So if I drag this position 2 and put it, with the trade that we were looking at before, let's see what area is going to be our risk. Let's see how many pips is going to be, the area of our risk, and how many pips is going to be the area of our reward. And let's see what the risk to reward is going to give us for this particular setup. Okay. So all you need to do right now is to grab your long position 2. Grab your long position 2. You can click anywhere on your charts, drag your take profit, drag your stop loss. What you want to do now is you want to align your entry price with your analysis. Remember, it was based on analysis that we said we need the market to pull back down reasonably to a particular level before we're going to buy the market. Okay, so this is our analysis. We need to align the position 2 with our analysis. Okay, put the entry price, or you can put it a little bit above the entry price, just a little bit above the entry price, but around the same area there. And in terms of your stop loss, you can put your stop loss a little bit below, where we feel like if this market keeps selling to the downside, we want the market to stop us from losing, because immediately it triggers the entry, we are in the trade. And when the price is below the entry price, we are losing in that particular market. So if we can allow the market to give us some room to say, okay, I'm willing to take this certain type of risk, but if this is becoming something that's unbearable, then I need to get out of the market. So I need to set my stop loss at a particular level that's going to take me out automatically. Now, your take profit, of course, you want to align that with your analysis as well. Now, if you look at the risk to reward here, this is telling us that if this market indeed pulls back for some reason, triggers us in this trade, right? Triggers us in the trade and actually goes up to, hit the take profit. What we are going to be making from this trade, if we are risking 1% of our account, we're going to be making 2%, 2.67% back. Okay. Meaning, let's say you're trading $100,000 account. 1% of $100,000 account is about $1,000. So if you are risking $1,000 on this trade, and this trade actually triggers you from your entry point and goes all the way up to hit your take profit, you're going to make 2.6K from this trade. Okay, 2.6K from this trade. And that's what we mean by risk to reward. Now, when it comes to the mode of entry, when it comes to the mode of entry, since this is a position that we are looking at, we are about to take, let's talk about how we can now enter the market. There are different ways you can enter the market. And then one of the ways is instant execution. So with instant execution, obviously, you're going to be watching the market as the market is pulling back down. And then when you see the market at your desired price, that's when you're going to now go on your MT4, go to trade, put in your lot size, and now see instant execution, and either just click on buy or sell, depending on what you're about to do in the market at that particular time. Since we're buying in this particular example, as soon as you see the price, okay, as soon as you see that the price has fallen all the way back to where you desire to enter the market, that's when you're going to execute that trade instantly, okay, using the instant execution on MT4 to say buy, and then you manually put in your stop loss and your take profit, okay? So all you can do is you click on buy when the price is around here, boom. And if the price keep falling, at least for that period of time, you will be losing until it hits your stop loss, okay? Now, when it hits your stop loss, obviously you are already out of that trade, okay? You're out of that trade. But if it goes ahead to, hit your take profit, then you have made a profit of 2% if you're risking 1%. Now, if you are risking 2% of your account and the risk to reward is still 1:2. So the way the risk to reward is presented like this: 1:1. You can have a 1:2. You can have a 1:3. You can have a 1:4, and so on and so forth, depending on how far you expect the price to be, okay? Now, if you're expecting the price to come this far, you can see how the risk to reward is changing, okay? Based on the fact that this is our area of risk and this is our area of reward. So as you keep dragging this, you can see how the risk to reward is changing, okay? So for now, this is a 1:2 risk to 1:2.6 risk to reward trade. Now, if you're risking 1% of your account. So let's take this example. You're risking 1% of your account and you actually hit a 1:2 risk to reward ratio. So because you're risking 1% of your account, what you're going to say is 1 multiplied by 2, you're going to have 2. So if you're risking 1% of your account, 1 being, the percentage you're risking, 1 multiplied by the, projected results that you expect from that trade, which is 2%. So 1 multiplied by 2.9, you get, 2.69, you get a 2.69 for a 1:2. Okay, this is for a 1:2. Okay, that's for a 1:2 risk to reward. So that's for a 1:2. Obviously, for a 1:1, you're going to get 1 back. Okay, since you're risking 1%, you get 1% back. That's 1:1. So you're going to get 1 back. But 1:2, you're risking 1% and you have a risk to reward here of 2.65 or 2.69, whatever the case may be. Okay, you're going to have, let's assume that's just a 2.6. You're going to have a 2.6 reward right back. Now, let's imagine you're risking 2% of your account, right? If you're risking 2% of your account, this number here is going to be replaced by 2, right? So 2 multiplied by 2.6, right? I'm just going to grab my calculator real quick. So 2 multiplied by 2.6 equals to 5.2 reward. So that's what you're going to be getting back from that trade, risking a 2% of your account. 5.2% gain. Okay, that's what you're going to make from that trade, risking 2% of your account. Now, if you're risking 3% of your account, the same thing, right? 3 multiplied by 2.6, that's what you're going to get, okay? So you always need to know what percentage you're risking in your account. Now, I'm going to show you how to, risk in terms of percentage by using a lot size calculator, but I want you to understand one very simple thing, right? The area from your entry price to the area of your stop loss price is being calculated in pips, and the position size tool does that automatically for you. Now, for you to know the number of pips from your entry price to your stop loss price, all you need to do is you double click on the position tool and the settings dialog box is going to come up. Okay, either you double click on your position tool or you just click once on your position tool and then come right down here all the way to what? Settings, okay? But the fastest way, obviously, is to just double click on your position tool, right? And then come to inputs, okay? Inputs. Now, obviously, you can see what this is looking like. If you have an account size of $1,000 there, you can put your account size there. Your lot size obviously should be generated using a lot size calculator, which is what I'm going to show you next. But what we are interested in here is the entry price, okay? The profit level, right? And the stop level, right? So your entry price, obviously, you can see the entry price here is identical to what we have here. So like I said, the mid price there is your entry price. The one at the bottom, since we are buying, that's going to be your stop loss. And the one at the top there, since we are buying, is going to be your take profit price. Okay. You can see how the entry price here is identical. You can see how on the profit level, the price here is identical to the price here. We have 1.36507. And for the stop level, the price there is 1.31848. Okay, you can see that's the exact same price we have here. Remember, on our MT4, we had an advanced level, or we had an advanced view of the chart, and we had a simple view on the chart. And remember, I told you it's going to be very important when we get to trading view for this particular reason. Now, if you look at the way the price is being presented here, it looks as though it's being presented in the same way the simple version of or the simple view or the simple mode on your MT4 looks like, right? We have 5 decimal places here. Right? And remember, I said you want to be looking at that on the advanced mode because it throws away the last decimal place, right? It throws away the last decimal place. So right now, what you're looking at is it can be as good as 1.3312. disregarding the last decimal place here, okay? Disregarding the last decimal place here. So if we take that same understanding to, the profit level and the stop level, right? We can see we have 5 decimal places here. We have 5 decimal places here, right? Now on the tick, this is where it calculates automatically for us the number of pips that this market has traveled, right? So from the entry price here to the take profit price there is telling us that this is going to move 3384 number of pips, right? But because now we are throwing away the last number here, okay, since we're throwing away the last decimal here, we can as well throw away the last decimal here. So this actually is telling us that this market is going to travel from our entry price to our take profit price. It's telling us that this is going to travel for 338 pips, right? Because now I'm disregarding the last number there, which is the 4, okay? Now, my stop loss obviously is an area of 127 pips, okay? 127 pips. Obviously, this is so large because I'm on the weekly time frame. When you're on smaller time frames, you're going to see smaller levels of stop losses and things of that nature. But since I'm on the weekly time frame, just because of this illustration that we're doing here, the number of pips for the area of risk is large. Obviously, the number of pips for the area of reward is also large as well. But in terms of the risk to reward, it's giving us a 1:2.65 risk to reward. Okay, I really hope you guys understand this when you're watching this. And yeah, if you don't understand this, all you need to do is, take the video back, watch the video over and over again, try to, take notes when you're watching these videos. And I believe you guys are going to understand this when you're watching this in real time. All you have to do is repeat the video over and over again. Let me just go over this one more time, right? This is the projected market that we're looking at, right? Our expectation for this market is for it to fall back into a certain area where we are going to be willing to take a buy position, right? Now, since we're waiting for the market to get here, we can either be, watching the market as it gets here. We're going to enter using the market execution, or we can be watching, we can just set a buy limit, okay, at this particular price and set our stop loss and our take profit. So when it comes here, it's going to trigger us automatically and it's going to put us in the market. Again, the area of risk is from your entry price to your stop loss price, and the area of reward is from your entry price to your take profit price. Now, the position 2 shows you the risk to reward potential of the particular trade that you are entering, and also the position 2 calculates automatically the number of pips from the entry price to the stop loss price and the number of pips from the entry price to the take profit price. Okay, now how you can access that is by simply double clicking on the position 2, and what you have here is your entry price. What you have here is your take profit price because we are on the profit level, and what you have here is your stop loss price. because we are on the stop level. Okay. Now, I also said this is looking like the simple mode on your MT4, whereby we have 5 decimal places presented to us on specific currency pairs, right? Now, what we're going to do here is we are going to throw away the last decimal and act as though this only has 4 decimal places, right? Now, if we apply that to the ticks here on the profit level, we can as well imagine that, the number of ticks or the number of pips that this market is going to move is 388 or 338 as opposed to 3388, right? We're throwing away the last number here. So the number of pips in terms of our risk, okay, talking about the entry price to the stop loss price is 127, throwing away the 5 there, 127 pips. That's the area of our risk. And the area of our reward is 338, okay, 388 pips. That's the area of our reward, right? Now, if you divide the number of pips from the area of reward by the number of pips from the area of risk, you're going to get 2.65, which is the risk to reward. Now, let's just do that calculation real quick, right? So 338 divided by 127 equal to 2.66, okay, which is identical to the risk to reward that we have. Very, very simple. Again, if you don't understand, rewatch the video over and over again. Now, I made mention of the buy limits, okay? I made mention of the buy limit. Now, if you're not going to be entering this trade in real time, that means watching the market. When it gets here, you execute your trades. If you're not going to be entering the trades in real time, you can just simply set a buy limit, okay? Now, if you click on buy limits on your MT4, right? When you click on the buy limit on your MT4, what it does is it shows you the entry price, it shows you where you're going to put your stop loss, and it shows you where you're going to put your take profits. Okay. Now, when you want to execute the trade, you have to put in your lot size before you execute that trade. Now, for you to get your lot size, let's do a practical example of, with this same setup, how are we going to get our lot size, so we can enter the trade. Now, for you to get your lot size, we need to go to my FX book, which is a platform that we use to check out fundamental information. And of course, we have a lot size calculator within the platform as well. So if you go to myfxbook.com, right, you can see here we have all of the fundamental activities in the market. In about 13 seconds, we have this news event that's going to be released. We have high impact news, we have low impact news. All of these things we're going to cover later on in the course. But what we are concerned with right now is the lot size calculator. Okay, so if you go to FX calculators right here, click on FX calculators, and then click on position size calculator. Okay, position size calculator. Right now, on your position size calculator, this is where we're going to calculate our lot size that we are supposed to use for the particular trade we are about to take. Remember, I said, when it comes to your lot size, you don't have to just pick and choose any number for your lot size. Your lot size must be derived using a lot size calculator. The derivation of that lot size basically is based on the currency pair that you're trading, right? The balance you have in your account, your percentage risk, and the number of pips in terms of the stop loss, right? So from your entry price to your stop loss price, what's the number of pips in between? With all of these, you're going to calculate your lot size, right? So your currency pair that you're trading, since going back to the market, we are looking at GBP USD. So the first thing you want to do here is put GBP USD right here. Click on GBP USD. Account currency, assuming your account currency is in USD, you put that right there. Account size, meaning your account balance. How much do you have in your account at that particular point in time? Let's say you have about $100,000. That's a round figure, so we can use that. 100,000. Okay, now your risk percentage, right? Your risk percentage. What are you willing to risk on your account? Now, the risk is going to vary from person to person. Obviously, there are some people who are more conservative and there are some people who are more aggressive, right? So let's say for somebody who's more conservative, you want to only risk 1% of your accounts, right? You only want to risk 1% of your account. So you're going to put that right there. Now, it's left for us to put the number of pips for the stop loss. So to do this, you're going to go back to the setup you are going to take. Since we already have our position 2 there, double click on your position 2, check the ticks here on the stop level. right? Now, since we have said that the number here is 127, throwing away the last number there, all we need to do is, copy this number and paste it on the position size calculator. So in terms of the number of pips we are risking for this particular position, we're going to be risking 127 pips. And then this number here comes default. So just leave it as it is, okay? And then you say calculate. Now, obviously, you can see what you're risking here is 1% of your account, right? The unit here is not important, right? What's important here is the lot size. So this is the lot size you are going to put on your MT4 before you execute that trade. Do not look at your account and say, well, since I have $100,000 in my account, I'm able to use 10 lot size. That's way over, maybe even 10% of your account, right? Let's see what happens when you're risking 10% of your account. You can see 7.7 lot size. Now you must have accepted the fact that I'm risking 10% of my account as my risk before even punching this into your lot size calculator, okay? You must have accepted the risk already. So pick a number that you know is not going to cost you too much when you lose, but at the end of the day, you can utilize it to make good amount of money. Now, when it comes to your risk to reward, since you're risking 10% on this particular trade, if you have a risk to reward of 1:2.6, okay? If you're risking 10% on this, right? It simply means your 10% is right here, okay? This is the area where your 10% is. Now, if the market should hit your stop loss, you have lost 10% of your account, right? So if the market should do this, market pulls back all the way, boom, does this, hits your stop loss, it means you have lost 10% of your account, right? With this exact same trade, somebody risking 1% of their account, having, taken the same loss, they're only going to lose 1% of their account. So risk management is very, very important. Now, I'm not going to tell you exactly how many percent to risk. You're going to choose whatever percent you feel like is comfortable for you specifically, okay? I know some people who are willing to risk 100% of their account, but, I mean, that's it's subjective from person to person, right? You don't need to risk 10% of your account because the next person is risking 10% of their account, right? Can you actually take the hit of risking 10% of your account, especially knowing that you probably have a big account size of $100,000 and you're risking $10,000 per trade? That's very, very heavy, especially for people who are total newbies. But since you're going to be trading a demo account, you can play around with some of these things and see how it makes you feel, right? See how it feels to like make money or lose money in the market, right? Sometimes try to risk 5% per trade, try to risk 10% per trade on a demo account just to see how quick these numbers can rise. But basically, I'm trying to explain to you that you should always know your risk. Always know your risk, right? So yeah, I think this should conclude this particular video. I just wanted to explain, how everything comes together. Now, I've been explaining this using the buy limit. Okay, this is the exact same thing for sell limit, assuming we're going to be selling this market. So if you want to invert your chart, all you need to do is hold down the alternate key and press I. So if we're going to be selling this market, you can either enter a sell trade, when the market gets here using the instant execution, or you can enter a sell limit when the market gets here, or before the market gets there, you can just set a sell limit. For me, I really don't use the buy stop and the sell stop, so I'm really not going to mention that because I don't use those personally, right? I don't want to confuse you guys with the buy stop and the sell stop. Those are actually very confusing if you think about it in a certain type of way. The only two ways I trade is either I'm entering with instant execution or I'm entering with a buy limit or a sell limit, okay? Now, when you click on sell limits, again, it's going to show you where to put your sell entry price, your stop loss price, and your take profit price. So with this, I believe I've concluded, some of the lapses. Let's go back to, the outline. Let's see if we have completed every single thing that has to do with the basics. So we can now jump into the real stuff, which is technical analysis. Okay, so let's go back to Notion right now, and let's see if we have completed everything that we need to, complete before we go into technical analysis for real, right? So just a minute for this to load right here. So yeah, we did very, very detailed introduction. We covered this block very, very much extensively. We covered this block here as well. We have covered this block here as well. We've covered this block. And also we have covered this block. And then we just concluded this block. So on the next video, I'm going to be taking you guys on an introduction to technical analysis where we're going to revisit trends. We're going to check, we're going to, reiterate how trends are formed, characteristics of a trend, how trends can change, talking about reversal, introduction to market structure, and things of that nature. So thank you guys for, joining this program. Thank you guys for watching this video, and I'll see you guys in the next one, man. Peace.